Grateful to be
They're
here.
much bigger, bigger loans, because they're for like construction
Just
projects.
not for the small stuff.
Okay, it is 1:05, so we're gonna go ahead and get started promptly. So thank you for coming. My name is Ryan. I'm the Managing Director here at the Governor's Office of Economic Opportunity. And we know that we've taken a lot of your time previously to discuss SSBCI, but I just want to say thanks. Alicia and I both want to say thank you for being here and for investing time into this important program. If this were just maybe a small program, we probably wouldn't make such a big deal about it, but it's 56 million with the potential of an additional 13 million to come to the state of Utah. We've had to go through a rigorous process. Alicia's really been the champ on this, kind of the tip of the spear, working with the US Treasury, which has been awesome. They've been supportive, but because of guidelines, it's also been a moving target. So we issued an RFP, and then we actually had to kind of come back and make some changes, and then we issued a second RFP, and pleased to announce that we did select a winner of that. That's me. I'm going to do it personally as a side hustle, so, no conflicts there, right? So the neighborhood, help me out here. The
Utah Center for Neighborhood Stabilization.
Thank you. Utah Center for Neighborhood Stabilization won the contract, so we can give them a round of applause. What that means is they then become the partner of the state and kind of the liaison to the financial institution community. And Alicia may get into that more, so I hope I'm not stealing the thunder. But we just wanted to say thank you for your time. We do have some updates and information. She's done a great job with her slides here. We thought it would be helpful if we could just quickly go around, say who we are, like our name and the organization we represent. So, Alicia.
Hi, everyone. I'm Alicia with Go Utah. Go this way. Okay. Hi, Roberta Reichelt with Salt Lake City Department of Economic Development.
Rolls off the top of things. I'm Doug Keefe. I'm the Executive Director of the Utah Microloan Fund.
I'm Natalie Alderi. I'm the Director of Immigration and New American Integration here at Go Utah.
Cameron Dalton. I am the Finance Director here at Go Utah.
And I'm Linda Caprellis, the Innovation Center Director at Go Utah.
I'm Marie Wallace, Women's Business Center, Utah State Director.
Jason Yurka, I'm with the Small Business Development Center.
I'm Sydney Shore, President and CEO of Utah Black Chamber.
James Jackson, Utah Black Chamber.
Steve Black from the Manufacturing Extension Partnership.
Dan Adams with Utah Center for Neighborhood Stabilization.
Luann Spangenberg with Utah Center for Neighborhood Stabilization. Say that quickly.
Okay, you said slowly. So it seems like we have a few guests virtually. Raymond?
Hello, everyone. My name is Raven Christie. I am the Airport Senior Planner, Disadvantaged Business Enterprise Coordinator, which is working with small businesses owned by women and minorities out here at the airport on federally funded contracts, which include the concessions program, and concessions is food and beverage, retail, as well as rental car, as well as construction.
Glad to have you here. Thank you. What about Heidi?
Hi, everyone. My name is Heidi Diarmid. I'm with MoFi. We are a nonprofit small business lender, very recently introduced to Utah. We just opened our first office there in Salt Lake. And some of you may better know my business partner, Dave Glazer. So thank you for letting us be here.
Right here. Nubia.
Yes, thank you so much. Good and happy Thursday, everyone. Nubia Pena, Senior Advisor of Equity and Opportunity to the Governor, as well as the Director for the Utah Division of Multicultural Affairs.
Awesome. Thanks, Nubia. I think that's everybody. So,
We'll grab Kendall.
okay.
Kendall, do you want to introduce yourself?
Is this our Kindle? Okay.
No, okay, no worries.
Perfect. So with that, let's jump right in. We have 2 hours blocked off. We're hoping to just fill every minute of it. No, we're actually hoping to just not spend that much time. So we'll jump right in.
Okay, awesome. There we go. Okay, so today's agenda. So just to kind of walk you through the plan for the next hour or two, we're going to review Utah's SSBCI programs, which we announced our partner for the loan guarantee program. We've got a loan participation program and a capital access program. more on specifics in a second. After we kind of go deep into all the fun financial stuff, we're going to take a break. There's some snacks in the bag, lemonade, and we'll come back for strategic discussions. So that is the plan. With the strategy, we're really looking closely at socially and economically disadvantaged individual strategy, how to increase accessibility and make sure this program reaches the people who really need it, who don't currently have access to capital. And then for targeted industries, how do we leverage this program to make sure financial products are good for manufacturing companies, for aerospace companies who may have different needs that are not quite the same as our SETI businesses, but are still really important to our growth strategy. So I'm going to start off by just doing a debrief really quick on SSBCI. It's kind of a big program with a lot of information to remember. And I know a lot of you either know everything about the program or you might have heard about it once or twice. So the program is $69 million. That's our total allocation. And its purpose is to expand access to credit. It's, oh good, you can see mine online covered. So that's kind of the allocation breakdown. A really important piece of this program is its emphasis on businesses owned by socially and economically disadvantaged individuals and very small businesses, like less than 10 people. So this is huge. You can see in this chart, there is a SETI allocation here of $8.3 million exclusively for SETI individuals. And then below that, there's a very small business allocation. And there's an additional piece called incentive funding there that essentially says we have to go above and beyond our SETI allocation. Not only do we allocate $8.3 million to SETI individuals, we also need to allocate 28% of the main capital allocation to SETI individuals in order to receive incentive funding. And if we don't hit those metrics, we lose $4.4 million. So that's the high level. Any questions so far? One question that might come up is, I know there's kind of whispers of a congressional change to SSBCI where they might change the allocation amounts. We've been advised to kind of move forward and just keep planning until that officially happens. If that happens, these numbers would go down, but Utah will still receive a very significant amount of money. So any questions on that topic? Awesome. Okay, so structurally, SSBCI is a cool program because we're not working directly with borrowers, like they're never going to come apply for a loan at Go Utah, but we work with lenders who then work with borrowers. So in terms of timeline, we've been working with the Treasury. There's a lot of deadlines they've set, but high level, we submitted our application in February. It's non-competitive. We're getting the funding. They're just kind of walking us through to make sure that we're hitting the stipulations. Next step, we would receive the funding from Treasury when they approve everything. SSBCI launches after that. We are still here. So we have not yet received the funding. So this is kind of a preliminary, we're still in the preliminary design stages, establishing terms. We're primarily working with lenders right now to make sure the incentives align. We haven't quite started outreach to small businesses yet, but that will come very soon once we get to the next stage. So Utah's programs, we've got 3. Here they are. So we've got a loan participation program, which will receive 45% of the funding. This is what will be administered by our partner, UCNS. Our next one will be the loan participation program, 40% of funding. We'll administer that along with the capital access program, 15% of funding. So partner announcement, we announced it. We're really excited. And I'd like to just take this moment to give maybe Devin a moment if you'd like to say anything about your program and just kind of if you'd like to say anything.
Call it the acceptance speech.
Yep.
The acceptance speech.
We've got your award.
We're very excited about administering the program. We did a similar program back in 2010 when the first round of SSBCI funding came about. So we already have an established program in doing that. We've already started doing outreach to banks and credit unions. Last time, probably the majority of the program was done through Utah banks, but we're really excited about working with the credit unions this time. And the reason for that is a lot of the credit unions are stationed in rural Utah. And we think in meeting the SETI requirement, we're going to be able to do that a lot through the Utah credit unions. In our outreach, the credit unions and banks are very excited about this program. How much did we get? Did we get 150 million in interest letters in participating in the program? So there's just a strong desire for that. And really, even though we've outreached to the banks, that's really commitments for the whole SSBCI program. So we expect to work with Go Utah in really leveraging those commitments that we have, or those letters of interest for the other programs as well. Is there anything you want to say?
No, we're just excited and we're looking forward to the program, especially in rural Utah and in those SETI collects, because we really think there's some underserved communities that have not had good access to capital. So we're excited about the opportunity and hopefully it moves as quickly as we think it's going to move, right?
Yeah.
I'm probably gonna ask a really dumb question. It's not the first time. What's the use of funds? Is it real estate, low income housing, or is it like what
So these are, yeah, these are going to be targeted towards small businesses for them. So not really focused around affordable housing per se.
Okay.
We have other programs that are out there, primarily like tech, low income housing tax credits. But this is just a focus to assist small businesses in Utah. So it could be working capital, equipment, things like that.
Any kind of business use, including real estate?
Not including real estate.
Not including real estate?
No, not including real estate.
You can't use passive real estate if
Okay.
it's a company that's going to use more than 51% of the building as their own.
Yeah.
Then that's something we would be interested
Okay.
in. And we're doing the guarantee part. They're doing the loan participation part. So we'll be guaranteeing loans, but the state will be actually giving loans with banks to, and with our the SSBCI.
Any size loan?
Our minimum was 25,000. I don't know if you've set a minimum. We recommended in our RFP 25,000 to low.
Any max,
Up to
any
2
max,
million.
any max up to 2 million?
Up to 2 million.
Okay, thank you.
Yeah, you're welcome. Good question.
Perfect. All right, yeah, loan guarantee program. We've allocated $29 million to this program. And a really cool thing is there's a part of this program that works with private capital. So for every state dollar, there's a goal to leverage $10 of private capital. So when we look at this number, 29 million, that's the number going to lenders, but the number going out to businesses, if we hit the 10-to-1, would be $290 million. So it's a really powerful program with this huge reach, right? So yeah. This program is really great for banks and kind of mid-sized businesses and targeted industries, great for a lot of purposes. I think the average loan size with this program last time was like 1.5 million. You can correct me if I'm wrong. But yeah, we're really excited to work with UCNS and look forward to the program. Any questions, I guess, before I go on, any questions about the loan guarantee program?
Yes, I have a question. Yeah. What are the qualifications for the businesses other than just being small? What's that criteria?
That's a great question. So this program has left it pretty wide, and they've really empowered the lenders. So essentially, we're going to design a program that lenders use, but ultimately the lenders will set their rates, their terms. We are trying to design a program that really helps the rates and the terms be better, and people who cannot currently access it maybe lowers the bar a little bit so people can get it. But I think this meeting and any meetings over the coming months while we set rates and terms will be kind of asking that question of what are the terms, what are the ways that this program will succeed. So if you have any thoughts or ideas, like this is a really, I think this is a fun time in the program because we have so much flexibility to really design terms.
The other thing I would say is we're interested in getting the incentive funding for the state of Utah, right? So when we look at the SETI definition, socially and economically disadvantaged individuals, we're going to be putting an emphasis on doing our lending for those individuals, at least in the first round, so that we can get those additional dollars.
Absolutely.
One thing to remember with the funding is it does come in 3 tranches, so we have to get 80% of the dollars out in one tranche before we have access to the additional ones.
Yeah.
So, but we would love any feedback of, businesses that you're dealing with so that we can, as we're putting together our programs, we're targeting them.
And Alicia may get into this too, but there's a piece called TA or technical assistance where we will work with various communities to help deploy some of the funds to those communities. So Anne Marie, for example, may be a partner, and then she in turn can work with the Women's Business Network throughout the state. And so we could work with chambers or different groups.
So you say that is the TA funding part of that package that you just went through?
It's a separate package.
Separate package?
Yeah, it's, we don't know exactly what the package will look like. The application is in June. So the Treasury will release allocation of dollars and purposes coming soon.
Because of
Okay.
course, my thoughts are around
Yeah.
that sense of readiness, right?
Yeah.
So, yeah. Thank you.
Will you, as overseeing the program over the banks and credit unions and any other lenders, will you apply credit criteria? Will you be part of the credit process?
We will, yeah, so part of the program structure is the banks have their own criteria, right, for extending the credit. They'll come to us and we'll have a separate credit committee that will review it as well.
So you'll be approving loans?
We will.
Thank you.
We won't necessarily be approving the loans, we'll be approving the guarantee, since we'll be administering the guarantee. And I would expect that this Go Utah would have a separate one for the loan participation, how they attach to that.
Yeah, I'd say like from an administrative point of view, their program will work pretty differently from ours. So they're a lot more involved in the underwriting portion because they're doing the guarantees. Ours is a little bit different. So like this is a diagram of how the loan participation program will work. So if you can see Go Utah, that's us. We will receive the funds. We kind of work with lenders. We're going to enroll lenders. So this program it's a participation program. So the state essentially co-lends with a lender, right? So this primary lender would be just a private lender. You could call them Zions Bank. You could call them any lender could be this, right? This is the private capital. They partner with state funds who then can co-loan up to 50% of the loan. And the way we've structured this to really enable as many lenders to participate as possible is that lenders can enroll through us to be an enrolled lender. And at that point, they can then deploy state funds on behalf of us. So we won't be doing the underwriting. We will be doing compliance checks just based on Treasury guidelines, but the enrolled lender would then be doing any underwriting requirements on their side. The really cool part about this model is that at the end of the SSBCI program, the funding that they deploy is granted to the enrolled lender. So it provides a really powerful incentive for them to get money out really quickly. So essentially there would be some kind of contractual process. You become an enrolled lender, then you're passing loans to us on a loan by loan basis. We say approve, here you go. And then any loan that you manage, you would keep the funding at the end. So as fast as you can get it out, that's the amount of money that you get at the end. So we're really hoping that this leverages the competitive marketplace to help them lower rates and keep terms low, and also inject capital into maybe community pillars, revolving loan funds, and lenders kind of on the outskirts of traditional lending sources.
So Alicia, on that, just a question on the enrolled lender, you approve the enrolled lenders, are they allocated a certain dollar amount upfront, or when they get a potential loan deal, they bring that and then you allocate the dollars at that point?
Exactly. So to be an enrolled lender, we're not saying, hey, and now you get $1 million, go for it. We're saying, hey, you are now an enrolled lender. And then it's a first come, first served basis. We could have maybe 15 enrolled lenders who are all just lending and sending us applications as they come.
So is the enrolled lender a servicer to you? So it's your
Yes.
money.
It's our funding there. Yeah,
You're
there's
part of the loan. So the money goes back to you.
No.
It does not.
The money goes to the lender, it stays with the lender. We will be doing reporting on it for the full duration of the program. So say it goes, so say you want to be an enrolled lender, you're a lender, you do $1 million in loans, we give you the $1 million. When those loans pay back, we can still count leverage on that. So we're reporting on it through the life of the program. At the end of the program, it's yours. But we'll report on it all the way through, and so you'll be recycling it as we go through. So typical loan terms are like 3 to 5 years. It'll recycle a few times over 10 years.
So they'll be required to recycle. It's not like they can do one loan and just let it sit so they can
Yeah.
keep it. They'll be required to
Yeah.
keep it.
So you're essentially paying back.
What was that?
You're essentially paying back into the fund. You're just recycling.
Kind of. By recycle, like recycle doesn't necessarily mean, say, if you're an enrolled lender, you do a loan, you give it back to us, and then we send it back out. We're still working on the terms of how that exactly will work. And we're gonna do some lender roundtables to get some feedback on rates and terms. But the idea is that the funding will be recycled with the lender that originally used it, so that lender could then recycle it in their community.
So there would have to be some guidelines that you have to keep it rotating so that you don't
Yes.
hold it for a
Yeah,
period of time, waiting for that special loan.
Exactly. You couldn't do
Yes.
one loan and hold for 7 years.
Right.
Yes, it has to be active for the
Not
full
that
duration
anyone
of
would
the
ever
program.
do
Right.
But at the end, when the program's done, the enrolled lender keeps the money.
that. Right.
Yeah, and there is work that goes into the enrolled lenders part, right? So we're trying to really align incentives, because what we'd like is a really competitive financial product. We want it to go to people who are socially and economically disadvantaged, to business owners who need it at really good rates. We want to encourage technical assistance. There's a lot of work and legwork in that, so we want to make sure that our program is designed so that lenders have some skin in the game and they're accountable and they're really working hard to achieve that goal. And it's favorable to them as well.
Question. And this
Yeah.
might be later or maybe not even this meeting,
Yeah.
because I'm a non-lender person. So
Totally.
if we're adding all these extra processes, and I might not be getting it right, but the lender approves it and then they send it to your organization to check on the guarantee and approve that. I mean, how much extra time is that taking to turn around a loan compared to a normal one?
Or
Yeah. It definitely takes more time.
How much more? I'm wondering.
How long?
Yeah.
Yeah, I mean, I think the 3 different programs will be just entirely different. We're trying to design the last 2 to have very similar regulations. So to be an enrolled lender in either will be a similar process. Just a different paperwork at the back end. In terms of how fast we can do the compliance check on our side, I think the becoming an enrolled lender part will be the more robust checking, because we want to make sure lenders can handle the volume. We want to make sure they can handle the reporting requirements. We want to make sure they're set up to succeed. So we're going to be there's SSBCI requirements around who can be that lender. So that piece might take a little bit longer. Once you're enrolled, it's just on our end, it's a compliance check. We're not checking credit scores. We're not checking that. So in my mind, it's a few days for that piece.
So the compliance with the lender. They're the one who's
Yeah.
working with that actually.
Exactly. So borrower applies with the lender. They just pass info to us. We check for the program requirements. Check, 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 check. Yes, green light, go.
so how?
We want to make it as
sorry.
bureaucratic as possible.
Yes.
Well, if you're gonna run the guarantee program, right? So-
We'll do everything we can to streamline it. so.
You may not have all these answers, as I
Mhm.
suspect, but if you figured out the the primary lender and the enrolled lender are sharing the same loan, right?
They are sharing a
Okay,
loan.
so if you figured out how they're gonna risk share or
Yeah,
or
how they're gonna
economically
risk
share.
We have looked into a few different models. One thing that has come up is we need to make sure that the primary lender and the enrolled lender they can work together, and that we want to make sure the risk is aligning so that the primary lender has an incentive to take the risk that the enrolled lender might. Because, for example, say a CDFI is the enrolled lender, they are kind of mission based. They might take riskier loans than say a traditional commercial bank. So we are going to hold lender roundtables as we decide the terms and rates. We're not just going to tell everyone how it's going to be, so that we can get that input and make sure there are any holes and flaws in the design.
I have one more question. So
Yeah.
I'm just kind of visualizing, okay, if I were a business owner who couldn't get a loan or couldn't get even a PPP loan when they were available, are we, I mean, the lender roundtables might be more helpful with this, but are we making it more accessible, or is we just widening the accessibility only?
Yeah, that's a great question. There's kind of 2 pieces of it we're looking at. We're looking at the financial product. How do we make sure that the terms and the fees and the interest rates aren't high, they're competitive? There's also the who can qualify for a loan piece,
Yes,
right?
that's
Can
what
they
it-
get it? Do they have a bad credit score? There's a lot of organizations, a lot of these like maybe mission-based lending organizations or technical assistance providers that have really amazing credit repair programs or ways to kind of come back. So I'll only mention one thing here, and then the rest of that question, there's another slide on it. So on the loan guarantee portion, we really look closely into the SBA. I've met with them. They are open to working with us just to make sure we're complementing their programs because they have a guarantee program that is supposed to be really accessible. And so we're trying to design ours so it like hits right underneath it. We are still working out exactly what those terms are. And so now that we have a contractor selected, I'm sure they're going to have a lot of really good insight into how that can be effectively administered and executed. But we're really trying to reach underneath who has capital. Any other questions? Okay.
I have a hand up.
We have someone, so Raymond has his hand up.
Great, yeah, go for it.
Okay, two things. One, the agency or the program that won the partner procurement. Is there a definition of, is there a specific definition that's going to be on the applications on what they define as SETI?
Yes, Treasury has defined that on our behalf, so they have a pretty built out definition, but the high level of it is it's any individual who they classify as SETI, which would be women, veteran-owned, BIPOC, those who are affected by the move to green energy. There's kind of a long list. Rural Utah is included. So any individual who is in one of those demographics. It's also any individual who lives in a community development financial area. It's like a CDFI area. They have like designated areas where you live that you classify. And the third is if your business is located in those areas. So.
Okay, that was one. Then two, and I'm prefacing my next question by, because of my compliance background of what I do, on the compliance side of the loans that are provided, or excuse me. So on the compliance side, is there some way, or is there some way that we're getting a report quarterly, or rather who is being the report given to quarterly on the number of loans and the amounts that are being lent to the folks that, those small business owners that meet the criteria? Is there someone that agency is reporting that information to, or is it just at the end of the program, this is the report and this is just what it is?
Yeah, great question. Treasury has some framework around reporting, so there will be an annual report that essentially the lenders will pass on to us and will pass up to Treasury. There are also quarterly reports on loans enrolled, collecting the demographic information, loan information. We'll collect their NAICS codes, we know industry as well. So that will be happening quarterly, like internally with Treasury. We're developing kind of our advisory board. So a question I think for all of you is, how often would you like us to involve you? Because we don't want to, take up all your time, but we are open to involve you as much as you would like. So we've floated having quarterly, maybe advisory meetings where we do present these reports and discuss like, hey, we've got X percentage going to these demographics. Do we need to do any adjustments? How is our industry reporting looking like? How are our rates looking like? So I guess that's.
So is that a report to the full body, or is that a report to an advisory board that is saying, yes, you guys are on the right track, or no, you're not?
Yeah, that's a good question. There will be a formal report compiled, sent to the Treasury, and I'm not sure, do you know if we normally publish those publicly?
Yeah,
Maybe
it should be a
Cameron?
public document.
Yeah, so it would be published publicly, so it would be presented to the broader group.
Okay, but it wouldn't be provided to an advisory board to say, yes, you guys are on track, no, you guys are not on track. Because it sounds like the information coming in goes directly to the Treasury and the Treasury then compiles the information, and there's not really any quarterly review or ensuring that, yeah, the program is being accountable to who we said it's supposed to go to, opposed to just disappearing into the cracks. And then all of a sudden at the end of the year, there's a report and everyone says, oh, how did they do that, kind of thing.
Yeah, okay. Well, then I think the answer is yes, it will go through an oversight board. Probably then quarterly sounds like the right timeline for that.
I guess that is the question. What is the oversight?
There's a broader board, but then we're talking about some smaller committees to really kind of dive into the details. I think during that committee level, we can have this conversation about like, are we hitting our objectives for SETI, for example, or for the industry? And then come back to the broader board, report out on our findings. But this is all, of course, going to be done in partnership with our partners, our contracted partners here. And then they have an incentive as well to reach those SETI targets, because if they don't, then that jeopardizes tranche 2 and 3. So I think we're all going to be walking to the beat of the same drum.
Exactly. And with those advisory committees, I've got some slides later on to talk about like strategic goals, and we are planning on aligning advisory boards with our strategic goals. So maybe let's come back to this question because I think this is a really important question on how this program will have oversight.
Correct, thank you. Because it just last piece is just that the 2010 program, to be honest with you, for complete transparency, the 2010 program did not hear anything about it until here we are 2021, that you mentioned there was a program in 2010. So out of transparency as far as now with this funding and this program, just want to make sure that A, the targets are being met, and if they're not, then what steps are being taken to ensure that they're going to meet that, and that's that oversight. So I'm very interested on that part when we get to that part of advisory or oversight, ensuring that the objectives are being accomplished.
And I think the difference between last time and this time is we have you and we have this committee, and that's exactly why we're meeting today, so that you can help us make sure this is.
Thank you. Thank you. You must have been reading my background, so.
So I did have a question.
Yeah.
So these are considered, this is impact dollars.
Is there like an official designation for impact dollars?
I'm trying to get clarity, because what the follow-up question is, did the metrics come, how you're going to measure come with the dollars?
Yeah, that's a great question. So this program is interesting because we are receiving guidelines kind of in a step-by-step basis. So we've received the original kind of round of regulations. We have not yet received the metrics piece. They put out an RFI on the demographic reporting piece, which a lot of states and organizations we're kind of a part of have replied to it. So the Treasury is going to stipulate what demographics are required. They are not, like on the borrower side, they're not going to say, hey, you must reply with demographic data. We are trying to reconcile how states can hit all of our metrics and also have people not be reporting demographic data. We're working that out with Treasury. We've kind of replied with our piece on that. Treasury has not yet come back with their final decision. But we also have the opportunity to add metrics on the state side. Yeah. So that's also a reason why we're bringing you all together is we'd love input on what metrics should we be measuring? How do we like articulate what this program should accomplish over 10 years in a way that is measurable?
Because that was more of my question, trying to dig down to understand, because when we say impact, it's really from an economic standpoint.
Yes.
What's the impact of investing these dollars? We understand the demographics behind it, but then from an economic ecosystem, what's happening with the dollars that hit these organizations, and how does it affect the impact? What's the impact to the economy of the state of Utah?
Definitely. So, yeah.
And we'll just say really big, so.
Huge.
We're gonna see if we can measure really big. Okay.
Yeah.
Okay.
Yeah.
Great point.
Yeah, thank you.
And I have similar questions where, I'd be curious, did the people or businesses that got the loans, have they received loans before? Are we really getting money to people or organizations that have never been able to get it? So I really like the idea of making sure that we have the right metrics.
I guess the first come, first serve kind of idea is that a little off with me because of the experiences of PPP loans and other kind of barriers to entry, and especially if we're going with more traditional, even if it is credit unions, it's still a traditional, more traditional lender that still has barriers to entry.
I think that's what we're hearing. We're kind of still, we're still kind of hearing the barriers and the access to entry.
Okay,
So-
then maybe it's
so
something
one-
like.
One benefit here, though, is that the funding comes in tranches, and so it's not all once it's out the door.
Yeah.
There will be a round 2, round 3. And so we will have that experience and feedback from round 1, but then we can pivot and modify for round 2 or 3.
But round 1 is 80%, correct?
Round 1 is 33%.
Oh, okay, gotcha.
But 80% of round 1 has to be
Oh,
out. So
Yeah.
you're right.
Yeah, there was.
How long is the first round?
3 years.
3 years, okay.
So the whole program is 10 years long.
Oh, 10.
Yeah, 10-year program, tranches come at 3-year increments. And so I think it sounds like maybe the best way to say it is first come, first serve with some checks and balances that we can keep talking about.
Because you wouldn't want one lender to come in with a great big loan.
Yeah.
No,
we don't want
that's
that.
right.
Yeah, I mean, because you may
Sometimes
have
never.
lots of little smaller loans, and so it's that balance.
Exactly.
And I think that will be difficult because some lenders or borrowers won't be ready all at the same time. So you're gonna have an ebb and flow where you may have a manufacturing one that is bigger in a rural area that may compete against a SETI. And so I think that's gonna be a balancing act to make sure that the money just is equally distributed, but it also hits who's ready and who has the need right now. And I think that's gonna be a continual balancing about who's ready to go.
I agree.
Alicia,
Yeah.
I had one question.
Yeah.
So from a banker's perspective, one of the challenges with SETI is fair lending as well. Because banks are regulated on fair lending issues. And how will a borrower defining how they are a SETI business, how will that be done? Because we don't want to put our banks and credit unions in a position where they're not gonna be biased, but we don't want to put them in a position where the optics make it look like they're biased as well.
Absolutely. Yeah, that's a really amazing question. I think as we talk about this program, we are in development of the terms and the conditions and the metrics right now. So there will be future meetings. We'll have a lender roundtable to discuss that point, and we'll make sure there are kind of all representation from a lot of different lending institutions to make sure that all different types are represented and can make sure their voices are heard. You may notice that we don't have all of the answers right now, and we've kind of done that on purpose. So we're not saying, and now the program will run this way, thank you, goodbye. We're going to bring you into the process maybe early because we like your input and we'd like to have these meetings as the decisions are being made with a lot of opportunity to influence the decisions, not after they're made. So we've got this meeting and we really appreciate the feedback. And at the end of this presentation, I'll talk more about the next steps.
I'll just add one last thing, just based on the comment that was just made. I think one of the things that we may want to be cognizant of is that this is an opportunity to mitigate existing biases as well. We don't want to create more, but we certainly want to mitigate many of those that exist.
Right, and there's a reason that they're not accessing the loans in the first place.
Right.
But I would just add is thinking about non-traditional lenders who are also CDFIs, right? So micro loan funds and like where my IRC lends, we have a CDFI. So who are some of those other entities that are outside of the traditional pathways as well?
Agreed. And on that topic, I will maybe shift into the next program design, which is very much targeted towards SETI.
I may have been told this, but I'm not familiar with SETI specifically.
Sorry, we're full of acronyms.
Yeah, no, it's okay. I had always thought it somewhat mirrored what CDFIs, mission-based organizations, letters like myself and some others in the room, essentially we're already trying to operate under.
Yes.
And when it gets to banks, you apply to certain CRA requirements, and because they fund us to a certain extent, right? So I wasn't too worried about that because we already have it built into the system, and which encourages lending to, in my vernacular, would be lower middle income businesses, minority owned businesses, women-owned businesses. That goes from there, right? But at the end of the day, I get held to percentages, trying to do majority of our lending in there, and that applies to quite a bit of the infrastructure already. But it also has to have economic components to it, such as, lenders have to stay in business. If we decide to cap rates, there needs to be some subsidization. There might even make sense to have some credit protection somewhere in there too. There's many ways to structure this, but I just suggest that you look at all that, right? Because the idea of, if you don't hit the targets and stuff, there's probably a reason for it, right? Because there's an economic disconnect somewhere. I mean, in terms of for the lender. And so, but because otherwise, why wouldn't we all, right? So because it's a set of demographics that all need capital for sure. Right. And so just look at it holistically on those structures. But most of it's set up, at least relative to many of the things I just mentioned.
Yeah, no, that's great. Thank you for your comment. I think that's a really great insight because there are a lot of programs kind of operating, simultaneously. We're working, trying to plug into a lot of these, like the CRA funding. We've met with the Federal Reserve and the SBA to make sure that this program can plug in there with those incentives aligning. It's really great. Now we have our partner selected. We can kind of move forward a bit more in that direction. But we really appreciate your comments, and we really want to keep you involved as we keep going down these paths. So finishing with the last kind of program design, and after this, we will have a strategic discussion. So a lot of these questions you've raised, we're going to come back to. This isn't the end, but I just want to bring up this one because I think it's important for our strategical discussions. So the Capital Access Program. Oh, I'm back at loan participation. Let's see if I skipped anything. This one receives $22.6 million in funding. Okay, Capital Access. This is our microloan program. And the reason we added this program in is because we've received a lot of feedback that this program is really powerful for socially and economically disadvantaged communities and for industries that have been really hit by the pandemic, like tourism, restaurants, these kind of small businesses who might need a smaller loan size. And then for people who are just starting their business, like they may not be at that next stage where they need $1 million in capital, but they might need 50 or 100 for their first stage. So this one is a loan loss reserve program. So the intent of this program is to help mitigate the risk of lenders. So essentially, your lender and borrower put a percentage into a fund, we match it, and that number just slowly grows and backs the loans enrolled in the program. You can think of it kind of like if you're like 10 and your dad's like, hey, I'll match what you put in your savings account, and he puts 5 and we put 5, and he doubles the amount. That's kind of what this program is. So this program, it's got a smaller total dollar amount, 12.9 million, but its average loan size is 50,000. So really good for micro lenders, has a really high leverage ratio. Last time it averaged 22-to-1 leverage. So if you think about that, you're literally saying, hey, we have 12.9 million and you're multiplying by 22 is how much money this program puts out over 10 years. So 22 is kind of the average. We've done our calculations based on 14, which is probably more realistic just for expectations, but still 12.9 times 14 is still a lot of millions of dollars, right? So it's not just the 12.9 million, it's all multiplying on a big scale. So any questions on this program before we head? I think we've got a break next and then we'll talk strategic goals.
Yeah, I do. I'm just curious how many people you have to hire to do all this, like on your staff?
On our side, 2 to 3.
Okay. That's gonna take some more effort, right?
Yeah, it's a lot of work on the upfront, but the two programs on our side run very similarly from the compliance check side. So the lenders are going to be administering it. So it's like a lot to take in terms of structure, but from a compliance check, it's not too bad. There's just a couple people running compliance checks. I'm not sure on your side. Theirs is more robust to administer because they're doing underwriting as well.
Yeah, we have existing staff and we're going to hire 1 to 2 people.
Good luck with that in today's market.
Yeah.
I know, right? It is.
Like, don't say that.
Yeah.
So I do have a question on this, with the enrolled lender. So if like Pete Swazo wanted to do a loan fund to work in partnership with this, could they do that and apply as an enrolled lender and make loans
Yeah.
to who they serve?
Yeah, the answer is yes, as long as they qualify under the SSBCI lender requirements. There are federal requirements that really are in place to protect lenders from bad loans. Like we need to make sure the funding is recycled and it's taken care of. So we're writing it to really help like revolving loan funds participate, but they would have to meet like a threshold where we can trust that they can handle the volume and any reporting requirements.
And that they have a skilled staff. Is that-
Yes, exactly.
Because, I mean, we know that sometimes it's hard to find staff and you want to give loans that people can actually use and that they benefit from them. And we're not just putting them in a hole because you gave them a bad loan and then you're defaulting against.
Exactly.
Because that would be wrong about the whole process. Then you ruin the credit. And it really has to be that it's selective, that the people can do good loans.
Yeah, exactly. So this whole program is it's a balancing act between managing risk and lending to people who need it. So we're really trying to shift it a little more this way than maybe has been done before because that's what the funding is for. But we also need to protect borrowers and make sure like they can handle these loans and make sure we have a really good structure in place. If they don't get accepted, where do they go and how do we get them back? And more on that later. So yeah, so the program's, and now let's have a 10-minute break and then we'll come back for strategic discussion. There's some snacks in the back. We've got cookies and popcorn and lemonade. So, and for everyone online, we'll be back at 2 o'clock.
Can somebody pass me a cookie?
We got one in contact too.
Yeah.
Okay, we're back.
Okay. So we're just going to talk a little bit about who we are as an organization and then kind of how that drives strategy for this program specifically. So many of you know us as the Governor's Office of Economic Development. That was changed a year ago to be the Governor's Office of Economic Opportunity. So for short, we say go Utah, which pains me because I'm a Weaver State and a BYU fan. But go Utah. And just a little bit about our office. So we have a new executive director, Dan Himmer, former state legislator, very effective senator. He was the majority whip at the time. So through the past year, our team has really redefined who we are and what our purpose is. So our mission statement here, as you can see, is really to be the stewards of the world's best economy and quality of life. And that quality of life piece is new because it's not just develop, but it's be thoughtful in where we develop and how we develop, especially with the population increase that we're seeing. So we try to do our best to help cultivate prosperity, future-proof Utah's economy, and then work with business at the speed of business. So we take pride in being quick and nimble during the PPP loans and through some of the grant money that came through our office. People were like, wait, you're moving faster than banks are. We would literally get an application, process it, and have a check in the mail 48 hours later. So we do the best that we can. Cameron just stepped out for a moment, but a lot of that is because of his leadership and Corey Ann from our ops team. We just have a great team. Okay. Our 10-year strategy. So we formed something called the Unified Economic Commission, which brings in the Speaker of the House, the Senate President, the Governor, the Economic Development Office of the state, which is our office, and also other key stakeholders to help drive policy. The governor also, when he was elected, created something called the Utah Roadmap. And so through all of this work, we have helped shape a 10-year strategy looking forward for the next 10 years of Utah's economy. So you can see each of these points, but the one that we want to highlight is to be the startup state. We don't just want to recruit businesses to the state, but how do we foster a sense of organic entrepreneurship? How do we foster a sense of starting businesses? And then not just starting, but retaining them too, because anybody can start a business and fail. So that's, I think, where SSBCI really ties into this. It's like, well, how do you start a business if we don't have access to capital? And who is it that's starting the business? Is it just the Wasatch Front, or can we spread the love? So historically, we've received a lot of accolades. You can see some of them here. Number one in everything, best in everything, you know, second to none. That's what we like to think. But we realize, in all honesty, we have challenges. We have a lot of work ahead of us. So with that, is that it?
That's perfect.
So that's kind of the segue into how SSBCI fits into our program. We really are concerned about, we really care about all corners of the state, all populations of the state, and we just think this is a perfect complementary program. So
absolutely. And I think if you look at a lot of the economic kind of like awards, I guess, I think something that's really cool about the shifting strategy is what Ryan mentioned, you know, adding the quality of life, which talks about impact, which is what we've been talking about. Like, we're not just getting jobs, but what kind of jobs are we getting? Where are they located? Who is getting them? And this is really important for a lot of populations, for mothers, for so many people. And so this shift, we're really excited about, to not just look at the numbers and the metrics that we've been measuring, but to really look at the impact that you've all been talking about. And something that's cool about SSBCI is it's really a long-term economic development program. It's not a short-term, okay, here's some funding for now. It's a 10-year program. It injects capital to businesses. And so really, like, it can be so powerful for a lot of places who haven't had capital yet.
And can I just interject one more thought too? And I know Natalie introduced herself. So if you haven't met Natalie yet, she's in week 2. 3. Best 3 weeks of her life. But she used to run the International Rescue Committee and joined our team to be the inaugural Director of Immigration and New American Integration. And so as we talk about a lot of the underserved communities, she's really trying to bridge that gap and help drive policy and be a resource to businesses. So get to know Natalie. We're really lucky to hire her, and it's just an important part of this discussion here. So.
Absolutely.
Usually we make her sing, but
I know.
we'll
No,
spare.
we don't want to hear me sing.
Yeah, so now we're going to shift back to the strategy, which there's been a lot of comments regarding that. And so we really love to open it up and talk about a few of those things we brought up, as well as others. So when we talk about SETI strategy, I actually think a better way to say it, that you've mentioned, is like impact strategy. That might be the new framing. How do we create impact from the funding? So what we've been working on, and I'll maybe present a couple things and then open the floor for input and ideas. We've been really looking at an ecosystem, and I'd like to thank Nubia for really helping drive this discussion, and Anne-Marie and Dr. Madsen for trying to like articulate like, what is it? Is it a pipeline? Like, is it an ecosystem? How do we meet people where they're at and not expect them to be in traditional sources to get capital? So one thing we looked at is how do we bring resources to people where they are through community partners. We have received a lot of feedback on community pillars as being really powerful, like revolving loan funds, lenders in areas, working through technical assistance providers who already work with people. So we've started building that network, but we'd like to keep going down that path. And then the second thing is we're working on building the relationship between business resources and capital access programs, because they really work in tandem. And we've got a lot of programs operating in both categories. But like the question is, when someone goes to get a loan, they apply, they get rejected. Now what happens to them, right? And so how do we build that path? Like, well, maybe your credit score needs some help. And Natalie was telling me the IRC has this incredible program that does credit repair. You go in and over X amount of months, you improve your credit. How do we send them there and then send them back so that they can come back and create this flow, like this circle up here, right? How do we really circulate them through the system in a way that's really valuable and they're not just getting rejected? So that's, yeah, so we're really interested in ideas like that. So now I'd like to just open the floor. So we've had a lot of conversation about metrics, about impact, about how do we really measure and make sure the funding is going where it needs to go. So we're interested in setting some strategic goals for this program. Go Utah has a 10-year strategic plan. It kind of works well because this program is also 10 years, right? So what are the measurable goals that we should be looking at to measure this impact?
Alicia, this is Nubia. I just wanted to quickly ask regarding the strategy. Can you talk a little bit about from inception to fruition, what are the language accessibility components of this experience for folks that are linguistically diverse? We know that when it comes to the Latino population, we have a significant group that are entrepreneur driven. Sylvia and Edward are both on the call, and so they can talk about that as it relates to the Latino. We also see that within the Asian community, but we know that language oftentimes is an afterthought. And so I am thinking, you know, can we have that transparent discussion regarding linguistic accessibility through our process, through our lenders, through our messaging, the campaign that's going to be launched in order for folks to know about these opportunities? I heard earlier on in the conversation that we want to target rural communities. Our rural communities that are diverse are also growing. And so again, this has to be interwoven through every step of the process. So I'd love to learn regarding this strategy.
Yeah, that's a great question. So I think with this program, there's obviously a lot of touch points with the borrower, right? They go to a lender, they apply, there's the paperwork. Before that, they hear about the program, they know it's for them, they feel comfortable coming to it with some hope that they'll be accepted. I think, and then they have the touch points to us, which I think are more lender side, they get approved. So I think in terms of language accessibility, I think the two pieces that would be really powerful to have maybe translated would be one, the lender paperwork, which we can't tell all the lenders and say, and now you must have 5 languages ready, set, go, right? We'll work with them to say, hey, well, what can we do to help you and support you if this is a goal? And we have some lenders here, which we'd love to hear from you as well. But in terms of the marketing, I think it's really important to have language accessibility because that's the first channel, right? Like a fair program means it's communicated well to everyone who needs to hear about it. So we started to build relationships with technical assistance providers. We've started to build those. We're really happy that you're all here because we're trying to kind of figure out what are those communication channels. I know Ryan's met with, I think it's Sylvia with the Rostros magazine, which is in Spanish, and they want to run a Spanish ad for this program. And so we're really interested in those options. We're still at the beginning of figuring out what are the best communication channels to go through. And I think that's why we'd love to hear from you, which is like, what are the best ways? Because ideas like I've had and Ryan's had are like, how do we maybe translate our websites? Well, the business resources and SSBCI resources are also offered in Spanish or other languages. And there's obviously a lot of levels. So we'd love to hear from you, like what languages should we look into? How many should we be looking at? And then what channel should we go down to improve language accessibility?
Can I interject really quick? Since this is federal money, aren't there any clauses that we have to pay that we have to pay attention to, specifically Title VI? So I'm just wondering, has anyone checked on that portion of it? Because that's going to cover at least making sure that it's in languages that addresses the demographics of your population that you're serving. So just as a back in your mind precaution or reminder, even though, yes, you want to have certain languages that all this information is available in, so that way folks don't feel turned off because it's not in the language that I understand. That is at least a priority that we should be translating into.
Yeah. Okay, I'm not sure about what Title VI says, but I've made a note and I'm looking into that.
I guess to that, and what is there a marketing budget that's associated with this, and interpretation and translation of resources?
That's a great question. So there's the original batch of funding that goes towards the programs. There is some degree of administrative allowance, but it's very, very low. Like it nearly covers the administration of it. We're still doing a lot of projections on how to model it to best allocate the funding. There is a technical assistance funding allocation that is forthcoming. We don't know the dollar amount, but that funding would be for marketing materials. That is also the funding that is being looked at to be possibly removed from the bill if that passes. So I think it's a question of, I think we'll have to wait and see what Treasury and Congress decide with the funding. But regardless of whether or not we receive it, we have an internal team and we have a lot of technical assistance providers. So we'll be working on like, how do we get the word out in the most efficient way with, even if we don't have a lot of resources, it's probably the government.
It's important to have a strategy around the who, how, and where, and who's deploying, right? Because we can do it in whatever language, but if it's sitting here in front of me, it hasn't gotten truly been disseminated to the right communities or the right areas, it's ineffective. And so a strategy around that is critically important.
I was going to say, I don't know if you've engaged with U.S. Translation Company at all, but they're based out of Utah, David Utria. I mean, that's what they do. And so he and his team probably have the stats on what languages would be most communicated here.
Yeah, that's a great idea. Yeah. And I was just going to say,
I was just going to let you know that there's actually an annual report that is drafted by the Department of Health. It's run out of Dulce Diaz's team, and they do a language profile for the state of Utah. They're about to release the one that identifies the top 10 languages that are utilized in the state of Utah. So we'll make sure that we get that over to you for you all to prioritize. But this is really an exciting time. And Alicia, to your point, you mentioned, this is really where we get to set the tone of how we do the work, right? This is how we get to signal and model that there are things that are going to be prioritized. So if we start talking about this earlier on and make sure that it's embedded within our strategy, then we're signaling not only to our lenders, but to our communities that when we say opportunity for all, we're really thinking through those gaps of folks that have not been able to receive access to capital in the past.
And I was just gonna say too, I know word of mouth sometimes gets overlooked, but especially within the Latino community, I think there's a trust factor of what's the, who else is doing this? So if we can generate some success stories and talk about how, this person got funding and what that meant to their business, I think that goes a long way. And then just kind of tongue in cheek, Nubia was there with me, but I did get my first Spanish interview at Telemundo a couple of weeks ago. And talking about this program. How did I do, Nubia?
You did so good, boss. I was so proud of you. I was back there just applauding, standing ovation, and you're going to be the face of this for our community when it comes to Go Utah. Just saying, it's official.
But I think to emphasize and double down on that, part of the word of mouth will be through our partners, and those are both existing and to be established partners. So through the Suazo Business Center, through the SBDCs, through the BRCs that are already infrastructured throughout the state. Now, we still want to target the SETI group and the very small business group. And so we'll look for those new partnerships to establish and reach. Like you said, we have to have a strategy, make sure we get in front of the right people at the right time. But those technicalities will be developed as we go. So it's good that that's why we're in the discussion now. But those are some of our outlets.
There's no negative hint to the bankers, but they'll be talking about it. They are going to talk about it, but it's who will they be talking to?
Let's say that the partner group is not just the lenders. It's not just the bankers. These are our other partner groups that are already established.
So what you're saying, the banks just have bigger voices at times.
True.
Yeah, the banks do.
These are for profit. And nonprofits left less
Well, they have the money.
marketing.
Definitely. Yeah.
So I was just it's super encouraging to me that the SETI group includes the rural businesses. So for example, yesterday I was down at a manufacturer in Cedar City. They had a dozen machines in this facility and they had 4 of them running because the other ones had no people to sit there and to take the parts on and off, right? Yeah, exactly. And so we're helping them through the UTMEP to bring in some automation. So I'm literally driving a robot down to them tomorrow so they can try it out, and then they're going to start purchasing it. Anyway, you just can't. It's part of it is this time is labor is the major dominant factor, and I think that we can use this as a headwind, if you will, and especially in those rural communities, and especially with manufacturers or people that need people to work for them, to really move that forward and maybe move automation together. I mean, Dan and I were just talking about the fact that it'd be interesting if you could actually get a group of lenders that were, say, focused around a given industry or a given set of deliverables that they could actually focus on, and that could really accelerate your compliance with the SETI group, right? That's the need it exists like this day. Yeah, if you can fulfill that tomorrow, they would jump all over it. So yeah, it's exciting, super exciting.
That's the kind of stuff we want to measure.
Yes.
That's impact.
Yeah, and it's highly leveraged, right, for years. Yeah, absolutely.
It's transformative.
We could do a podcast with maybe some people around this table and Alicia and talk about it, and then we could all share it through our various channels.
Sure.
Just an idea, but
Definitely. And with like content like that, because podcasts, maybe events are similar. I think an idea would be like leveraging events, because we could do capital access like kind of events, but we could do targeted events or targeted podcasting. So we could do a podcast for women in capital. We could do a podcast for industry. We could do, because we've got a lot of time with this program. So if we just get a good kind of content strategy, I think it could be really successful. From our point of view, I think our strategy will probably be a lot of maybe centralized communication coming from us. Like we might produce some content. We will rely heavily on probably the technical assistance providers, the partners, to really, talk to the businesses. Because similarly to the capital program, we are going through lenders to the businesses. We're going through partners to the businesses. But what we're going to try really hard to do, and maybe in the next meeting we can do a more concrete like schedule and what that will look like, is kind of create events that people can market, create content and social content for everyone to post. So we've got like a partner stream of content pushing out that you all can be sharing. Really looking closely at, is it newsletter marketing, is it email marketing, like sending blurbs out fairly regularly, leveraging success stories. That's a strategy that Treasury has really encouraged in making sure you're strategic with success stories and pushing them out to the right locations. So I think there's a lot of potential for what we could do. And then maybe in our next meeting, we can iron out what that will exactly look like. Any other comments or thoughts on this topic?
I think to Nubia's point, when you're kind of like thinking through the ecosystem, it might be a jump too far to think about the measurable goals without thinking about the barriers of entry.
Yeah.
And so that might be one area that we can have a conversation around. Language access is one piece. Readiness to be able to apply or to receive funding from the loans is another piece. I'm sure there's a myriad of things and kind of brainstorming around that, and then thinking through how to reduce those barriers, and then coming up with your measurable goals.
Yeah,
good framework.
I think that's a good point. There was an article yesterday talking about, I didn't even know this program existed, but it was for fourth graders, families having access to the national parks. And the article said that no minorities, there's a study out of BYU, but very few minorities had access to that program. And it made me think of that. What were the barriers for them not being able to take advantage of a free program, right? And to get exposure to our national parks. So I think that's an important thing. And I'd like to understand what organizations are doing to kind of overcome those barriers that are out there.
Well, and I think if you go back one slide is talking through the ecosystem overall and bringing the resource to people where they are through the community partners. So these are the partners, and there's probably a lot more that would have input in there to understand and to give perspective from each of their respective communities on those barriers of entry. Nubia is right spot on with the language access piece. I think having inclusive spaces that people feel like they could go in the first place to actually talk about their loan or to talk about their technical or funding needs is another piece of it. The marketing is another piece. Like, do people see people like themselves in those marketing materials and be able to resonate or identify with a small business owner or somebody who's ready to scale up into that next level? That's someone that is reflective of their own communities as well. And so hopefully with the technical assistance funds, we'd be able to engage with either within the team here or with others that can help kind of think through a marketing strategy that creates, communication channels and collateral material that's reflective of the communities that you're targeting too. As a little bit of a side note that I just thought about, but yeah, I think through those barriers a little bit more.
Yeah, I'm just gonna add on to what Ryan was said earlier about the Latino community. It's with all communities, is that trust factor. So that's why the community partners are important, because that can build that trust.
But I also think from the governor's office standpoint, having some experience from a state level position, is that one of the things that is key to your success and partnering with what we're doing from a grassroots level is not just deploying out to the community, but you show up. We're talking about rural and we're saying a lot about rural, but are you going? Do you show up? Are you making that extension to them, or do they have to reach to you through us? And so it's certainly a way to build that bridge to really get that credibility that they're really serious about. They are taking the time to come to talk to us, or just to come share this information even in our language. I just think to just kind of think about it from that level.
Can I just share a fun little story that happened last week? Just to your point, you're spot on. We can't just talk the talk, we have to walk the walk. So we ordered a 8-person plane last Friday with the lieutenant governor and a few of us, and we went to Wayne County. Who's been to Wayne County before? Okay, population 2,700. So we visited with this young couple. They have 2 or 3 small kids, He was a high school teacher. She was the former rodeo queen. She wears the cowboy hat and the boots. He has the big buckle. They just started a small business, a meat shop. And I said, so what are the impediments to your growth? And they said, we just need access to capital. I said, well, have you gone to the bank? Yes, we're not quite eligible for SBA financing. Well, let me tell you about SSBCI. Really? And they got all excited. And so that's hopefully one of our first success stories. Rural Utah at its greatest, right? But you're right. We need to be there. We need to tell that story. We need to celebrate.
We need to ride that story till we get to the next one.
That's right.
Just an observation. So I've been in this, mission-based work for about a year, and one of the things I plugged into, and I see many people in the room here have been, is the SBA's got a roadshow.
Yeah.
And they, I think it used to be called the Rural Roadshow, and then it became the Roadshow. But basically, it would convene ecosystems, like not unlike what you're talking about up here. Different parts of Utah, including rural parts of Utah. Some rural have turned less rural these days, but I would, and I know Go Utah and other representatives have been at those roadshows, and I guess it looks like you could combine certain efforts with that, because part of that could also unconfuse what could be a confusion about who accesses SBA financing versus this kind of financing, which I guess in theory should be riskier than the SBA loans, I think. And so I think many of the concepts you're talking about there have been, the road's been paid to a certain extent, but probably could be partnered in some way to be efficient. And then go back to calling it rural, or something. It just pick up the frequency. And so because we probably don't do it enough. Trying to get outside of the highly populated areas and really focus on rural areas.
Awesome.
And obviously, as part of all that, many people in the room are focused on the mission of whether we call it LMI or minority-owned businesses or women-owned businesses or SETI, or they're sort of, everyone wants to get the money to people that can't get it anywhere else, right? So I just think that there's an opportunity for that here, because you're talking about many of the same things. And I also see John Giggy's on the phone somewhere too. So
Yeah.
he's,
Oh, I love that.
Yeah.
It's actually
Can I-
funny. Yes.
Can I interject? I think there's enough people around the table that represents organizations that provide resources that when you start talking about rural Utah, that maybe like the instance that the gentleman was just talking about going down to Wayne County, that there's enough resources around the table that could provide assistance to those type of new form business that could assist them, so that way they can survive and succeed. For example, whether it's PTAC, whether it's the Women's Business Center, because I know they have a rural program, and some of the chambers, I don't know if they have virtual programs that can go out and provide assistance to these businesses in the various parts of the state. But I would hope in this go around, with the resources that are around the table, that we can help a small business owner, whether they're women or minority or whatever, around this state, to help them with business plans, organization, accessing commerce, or getting whatever license or what have you, but providing that assistance to them to make this just a little bit different than accessing capital. You can have the money, but if I don't have the technical expertise to help me with everything else I need to do, and that resource is free, because a lot of the folks around the table provide these free resources, let's marry those two together so that way we can be different than anybody else around the country and how we support our small businesses to be successful, because we keep talking about how they're the backbone of our economy.
Yeah, thank you. That's great perspective. Nubia?
Yes, thank you so very much. So just really quickly, because I do have to jump off, I wanted to just ask, as it relates to the information for our demographic collection, Are we using what federal guidelines are asking? Is there any flexibility so that we make sure that we are keeping track of who is participating? And when we're able to report out who has successfully participated in the SETI program, we have a breakdown of the populations that are being served so that we also understand the gaps of who we're not reaching. So what's the level of demographic data collection that we are requiring? And I know, Alicia, that you, myself, and Anne-Marie yesterday, we were talking about, even as it relates to the state, when folks register for businesses, it's not required for them to select some of the demographic data, and we're losing out on opportunities to truly tell the story of new businesses opening. So will it be required? And what data demographics will you be using? Can we deviate from those that are currently used on census to be more inclusive of the populations being served?
Wonderful question. Treasury is still finalizing the data points they will require on a federal level. So whatever they require, we will have to execute because they're giving us a lot of money. So that's how it works. From a state perspective, we can build in metrics if we decide that they would be important. There have been a lot of conversations between states about how to collect this data when I don't think we can require it from like a legal perspective. We can't say you must tell us this. So if there's a few ideas, like could we require it as a condition of closing the loan? Could we, like there's some creative ideas being passed out, and this might be something we work with the lenders on, like what is the best way to make it borrower friendly and still get the data we need. I know like Nubia and Marie and I have been kind of talking about how do we improve this with the business registration system, and they're doing an amazing job. We've had meetings with the Department of Commerce. They're incredible. They want to do it too. So I think this is a really great opportunity to open a lot of those conversations and begin to make some real progress in how we collect data. Yeah.
And again, I'm not a lender, never worked for a bank.
Yeah.
For our organization, we ask for demographic information, but they can opt out. I mean, one of the options is I prefer not to tell you. But when you make that required and you offer them an opt out, and again, Nubia and Alicia and I were talking about this yesterday, they're more likely to answer if they're willing. But I don't know how that works with lenders because they have to be non-discriminatory. Do they even ask that right now? Okay, so I know that the service providers could probably provide that to you. We can't give any specific data to anyone, even our host organization, but we can give statistics. Like we could say we work with this group of entrepreneurs, and we know that these are the ones that got approved. And that is one way to get some of the information. It's not the whole picture, but it is a little piece of it.
That does measure like how the ecosystem of the pipeline is operating, like where they're going and where they're coming from. So I think that is a really interesting idea and a really important direction.
I just think lenders are very careful about what kind of information, and having worked with several other federal programs about what the requirements are, and it's always an opt-out because there are some people who don't really want to share, right? And some of the SETI things we'll have to come up with some way. Some people have talked about self-certifying, and as to whether that's going to be, if you self-certify that you are a SETI person and you meet those requirements, because no lender is going to want to ask you, all right, which one of these do you want to check your name by? I mean, I think that's intrusive into your life, right? I mean, there are some people who are very private and they don't want to share what their issue is, but it would be good because you're tracking data and you want the best you can. And I had one from a federal group said, well, your staff should guess. And I think I'm very uncomfortable with that. I don't want that. If you don't want to give it, then we should give you the respect that says we don't, but it is going to skew some of those numbers.
I do think though, if you can provide some of the why for collecting this information, that SETI communities might be more willing to opt in. It's really important for us to understand who we're lending to because we have a strong emphasis or a goal to ensure that we're helping SETI communities access capital. Your information goes, to helping us understand if we're making that mark. And I think that, and then with the business technical assistance providers, also messaging that this is really important. Like, we need to know so that we can make sure that we're meeting these goals. And if we're not, that we hold people accountable for that.
Can Utah communicate back with those who receive lending? Could you do a survey? I don't know how it works, but if you said you were part of a really great program, in order to know if we hit our numbers more accurately, would you mind filling this out? You know, with the thought of this will help us maybe increase next time, or is it working or something?
Without personal information, you're really just taking data.
Maybe it's all anonymous. We know that all these people got this amount of money. But it would be helpful to know for the smaller loans and who got the smaller loans versus the larger, but
yeah.
Well, and I
that's
think
an
if
idea.
you build a relationship with them, then they're more willing to trust you. Like,
Right.
I
Right,
just
the
don't know
trust is
how,
important.
and we have to speak for the lenders. I mean, I know they're very cautious about this because they don't want to have a fair housing or a fair lending claim against them. And many are suspicious of that, for sure.
Well, the way that they've drawn the boundaries around what counts as a setting and the fact that it pulls in rural, if the application says Richfield, they count.
Yep.
Right? There's not a question,
Worried about
right?
that.
Yeah, do you know what I mean? So it just not necessarily that we want to detract from our other efforts, but that's a guaranteed win.
Yeah, that's
Right.
nice about rural.
Yeah. Yeah, even if they put, Mr. or Mrs., you may or may not know now these days, right? So, but anyway, but that,
At least a
Richfield,
portion of it,
it's
we
there.
can guarantee that we know exactly.
We got one.
Yeah.
Yeah, these are all really, really great insights. I think a tricky thing with this is going to be we need to marry the efforts of the lenders and the people assistance providers and the borrowers. So we'll talk in a second about future roundtables, and this will be something we need to talk about in those roundtables.
I think Raymond is trying to raise.
Can I add a piece? I know that this can go around and around in circle, and I know everyone has a good intent. And so I'm just gonna give my 2 pieces of sense. Not that I have any, but I'm gonna give my 2 pieces of sense based on the number of years I've been working with small businesses and those folks that just don't want to disclose the information because they feel it's bad in some sense. Please understand that in our state, since there's not a certification program to identify those businesses owned by women, minorities, what have you, and looking at the information to verify, you don't have that piece. You don't have a document or an agency that says, yes, these people meet this certification requirements or that requirement. So understand there are going to be some folks that are going to say, no, I don't want to provide that information for whatever reasons, but they're just not. Even though you may come back and say, hey, this is a benefit to you. Hey, this helps us do this. Hey, this, that. Please understand, on my experience, there are going to be some folks that just will not provide out of whatever reasons, they will not provide that information because it's either too personal or they don't want to identify with it. And so just understand that's going to happen. Just that is going to be a piece of this pie. It may be the crust, but it's going to be a piece of the pie.
Great perspective. Yeah. So it looks like our goal will be to enable everyone who would like to do it, to make sure we're building trust so that those who do feel comfortable can then do it and use strategies like default options to improve the metrics of those who are reporting.
I think just one other thing in my experience, sometimes the loan recipients don't know what channel of funding necessarily that they're getting. They just simply access capital from somewhere.
Yeah.
So either it needs to have some other name that's associated with it so that it's really clear when you do a follow-up survey, or that they know that this is this track of funding. If you're trying to collect data based on this vendor specific.
That's like people knowing I got an SBA loan.
Right. With that's
So they know, oh, that was my loan.
Yeah.
That makes sense.
The one thing I've always said, a rose by any other name is still a rose.
So the SETI or and you are a SETI.
Rose by any other name is still a rose. So
Makes sense. Cool. Let's see. The next, if we're ready to move on, any other comments on this topic? And there will be future events, so there will be more opportunities to dive deeper into.
I have a really quick one.
Yeah.
So if I have it right, is the federal government still giving you more information on what those metrics are? Do we establish them? They're probably provided, right?
There, yeah, a lot were provided by the treasury. They have not yet provided them. They've given us some information. They put out an RFI and they're reevaluating.
Okay.
The state
So we know
also,
what study, like,
yeah, study will be very dictated by the federal government.
just like you were saying, I forgot your name.
Steve,
Steve.
yes.
So saying like, check, we can figure out that one, but some of these other like household income and gender and race and ethnicity are gonna be harder to track. As
Well,
long as we know what the list is.
The other thing as well too is this, so just speaking of manufacturing, 3,800 manufacturers across the state, 8% of them are in rural communities. And which basically, if you work the math out, my math's pretty close to 270. And a lot of them are little, right? I mean, you're talking just someone doing flowers in the basement, or maybe they're cutting up meat or something like that. Do you know what I mean? Where this capital may or may not be valuable to them.
Yeah.
So it may not be the big win, right? That it could bring all of them in, but anyway, something to consider.
Yeah, I have one thought. Sorry if I'm distracting from the conversation, but the Women's Business Center of Utah has collaborated on a grant competition for the last 6 years, and it's all based on what would you do with $5,000. So my concept of, the minimum is 25,000, like getting business owners thinking, what would I do with $25,000? Because sometimes you say, what would you do with 25,000? You haven't got a clue. Like, I don't know. What's my opportunity? I don't even know. I'd love to have $25,000 in my bank account, but what would I actually buy that could grow this company?
You're right. And
So
how would I ever even have access to $25,000?
But I also think that's where the TA comes in.
Exactly where it comes in. Yeah.
Because, just being an entrepreneur, $5,000 is mad money. I'm mad because I owed 5 people and I have a contract that I sitting here, but I don't have the capital to even begin that contract, and I've got $5,000 and I can pay these people that I owe, and now I'm stuck again.
Yeah.
And so it's all about that impact, sustainability, trajectory. How does this money really impact my growth and sustainability?
Short term and long term.
Yes.
I was talking to a friend of mine yesterday, long-time old friend, and I was like, how much money are you looking for? He called, I heard about small business grants. I was like, well, how much money are you looking for? Oh, about 10 grand. And I start talking about CDFIs and other SBAs. I was like, okay, if you need 10 grand, ask for 25, right? Allow someone to go through your projections and your business plan, and let's work that through, because they're looking just to get by, but they're not looking to grow, right? It's like, I need this one piece of equipment. I know I can do a whole lot better, but to Cindy's point, they don't know how much that's going to set them back by simply just borrowing a measly 10 grand. That measly 10 grand is going to add, a $700 a month payment that they're simply going to take the 10 grand and pay it right back. They're going to be mad about that little 10 grand.
Let me just make a comment about that. It may be restating some of the obvious, but I like to do that too. One of the things I've learned in this business, and I'm trying to build towards, is the better and more effective marriage of technical assistance and planning. Because the nature of at least mission-based lenders is they tend to focus on young businesses, startups, pre-startups, and that's the most underserved population, regardless of demographic. But the common characteristics of those businesses usually are: don't start with a lot of capital, don't have a lot of knowledge about all of the business areas, about how to run them or how to administer them, and they need money and may not deploy it right to hit every objective that was just mentioned here, unless they're trained, unless they develop, unless they do it over time. And what I've noticed is there's a whole lot of resource out there that wants to help, but less that are putting it together in a solution. Okay, so there's a role for everybody. As long as it's coordinated better. And that's funded better.
Would there be any opportunity for like product bundling? Like,
there's all kinds of opportunity. That is, in fact, there's actually opportunity to, I hate to say it, but dole out the money as they approve stuff, and there's all kinds of techniques. There's all kinds of techniques to encourage that, and it can happen when you've got not-for-profit mission-based mentalities and public funding. So it can happen less if it's mostly private, right? So that's the opportunity, right? So I think you're going to find that there's every kind of capital source. There's every kind of every kind of provider that can help. And the challenge is going to be, how do you make sure you provide things like loan loss reserve funds and other things to make sure that you protect financially, because it's inherently a very risky population of business. But then how do you coordinate that? And I'm saying coordinate between money and resource, because it all leads to the same place. It leads to exactly what you just said, right? The entire objective is to foster somebody through the early parts of their business stage and then get them eventually to a cheaper capital source, which is bank and or profitability and so other things. And that takes time. It takes in, and so the challenge that I've observed through the whole ecosystem is that how do you actually coordinate putting this together? Because it's not just one organization. It's everybody. It's hard to put everybody in there. And that's to me the most difficult challenge. But it can be done.
Definitely. And I appreciate you saying this, because we have a really cool platform here with all of you at the table to begin this coordination task. Awesome. So I'm gonna maybe speed us up a little bit because we've got 12 minutes left. But these are all really, really helpful comments that will inform the agenda of our next meeting. So I appreciate it. Next, targeted industries. We're working with targeted industries, and they'll overlap a bit with the SETI businesses, but we're trying to work on capital products that are attractive to these businesses. We've met with some advanced manufacturing businesses. We've met with the Hill Air Force Base. Linda has the SBIR grant. So we're working, I think that what you just said is also very applicable to funding sources in the industries. More on that maybe in the next meeting when that's more fleshed out. Okay. So concluding this meeting with a few action items, because we've talked for a while, so we'd like to move some things forward. So this program, obviously we're in development. The next 6 or so months are foundational for the next 10 years of this program. So we would like to coordinate a lender roundtable. We have a partnership with the Federal Reserve, or they're working with us, I guess, to connect with lenders. It's amazing to have a partnership because I know you all have really good relationships with lenders. And we'd like to get their input on how these terms should actually get put together. So when I say lender roundtable, it doesn't mean if you're not a lender, you're not invited. It does mean we'll dive deep into the technical side of terms, how it's all going to work, and start to get some actionable plan there. So this meeting will be in about a month. I'll send out an email with an invitation. We would love your help in connecting us with lenders. We've talked a lot about how do we reach communities that may not have access? How do we reach rural? How do we reach those who may not have had it? I think in part that is this group here, and we'd love your help in connecting us with these lenders who might participate. So if you know of anybody, we welcome an email connection. Feel free to send them to me and I'll add them to this email list so they can come to these meetings. But right now we're really trying to build relationships with lenders, because a lot of what we've talked about with impacts, really we need lenders, and we need a program that speaks to lenders to execute that in a way that accomplishes what we've been talking about. And we need the program to be favorable to them while accomplishing our objectives. And then, okay, SETI ecosystem. We've talked about this. We're working to build these communication channels, these relationships. If you know of anyone who's not in the room who should be, please email me with their contact information and I will add them to this email list so that they're on the list to get these notifications. We will also have a follow-up roundtable. I'm not sure what it's called. If it's, I like the word, impact was a good word, so that was a good name. We'll come up with the name for it, but we'd love to have an impact roundtable to talk more about our strategic plan, because there's going to be like, what are we trying to accomplish? What metrics do we need to look at to really measure that output so we can have really, really informed reporting? Because we'll be doing treasury reporting. What we'd like to make sure that we're not just measuring how do we stay compliant, but we're measuring how do we excel? How do we create an outstanding program? And then, oh, there we go. That's the end. So thank you all so much. We have a few minutes if you have any questions, but thank you so much for coming. We really appreciate it.
You've done a wonderful job.
Thanks.
Yes.
Thanks, Alicia.
Yes.
Thanks, everyone.
Thanks.
Let's go around.
Thank you. That's a wrap. Thanks so much.
Forward to being around the table.
I know. We headed the same direction.
I mean, it's such valuable work that you all.
Thank you.
Yeah.
Where are you guys going to that geographically? Are you right here in Tulsa?
Statewide,
Yeah.
statewide.
And, you know,
Yeah, but our-
high school is not just,
Yes.
You had presented at
okay,
a,
that's on the way out for us.
out
Yeah.
at the Taylor
We're just
Center.
high school, right? If everyone, if I explain it.
Sure.
Lot number one. Yeah.
Yeah, I guess so.
Well, I remember.
It was a year ago.